Hello everyone, this is Market Ready. So I want to talk today about the daily bias. What is the daily bias? What is the importance and use of daily bias? So daily bias is mainly a trend or direction of the daily trend, daily chart and comments. And it is useful. It allows us to trade with the trend, taking the biggest move. It allows us to avoid counter trend entries like like when I say short, it's not means sells, like retracement, pullbacks, and fake outs. So as you know, we have entry model and entry signals. Entry model, it's our model of continuation on time cycle or reversal when we sweep and reverse. So daily bias, we will avoid to take short here because when price will pull back here, many will go shorts. But with the daily bias, we will be in continual mode. So we're going to take only longs, and it will allow us also to take profit and enter at all stage when we have reversal. So for the daily bias, we're going to use tools. We have obviously the daily chart. We have the weekly candle. We're going to use also candlestick pattern. We're going to use MVGs, and we're going to use anatomy of the candle. We're going to start with this one, anatomy of the candle. As you know, for example, this is the weekly chart. As you can see, most of candles have wicks. And as we said in our entry model, wicks means in a bearish candle that price went up in the first stage before going down. In a bullish candle, like this one, that price went down in first stage before going up. So this is bullish weekly candle with a wick. So this will be our weekly candle. So the first stage and the first step in our weekly daily bias is to consider the previous weekly candle. So this will be previous weekly candle, and this will be previous week high, and this one is previous week low. Previous week high, previous week low. And this is weekly candle, and this is the daily candles. So the daily candle will open here. If we are to expect bullish trend, a continuation, the first thing we have to do is to take previous week high, sweep it, retrace, retest, going up. If we expect reversal, the first thing we have to do is to take the previous weekly high, sweep it, purge, then reverse. That's why Monday, at the beginning of the session, so weekly bias analysis process. First, consider daily chart market structure. If we are making higher highs and higher lows, two, draw previous week high and low. Three, observe Monday open. In a bullish scenario, in Monday open, we're gonna take previous week high. So this is daily candle. This is Monday. We close above it. To make a daily candle, we'll make it much more smaller. Daily candle one. Close above it, we can sweep it. We may, this is just an example, have bearish Tuesday, no, this is not. So horizontal ray, I want this one. Yeah. A break and retest. Then we continue. The advantage of the daily bias here, so daily candle, this is Sunday, Monday, Tuesday, Wednesday. So the advantage of daily candle is we're taking long position here. If we go short here, we won't expect a big move. So it will be temporary retracement or short for a limited period of time and going long again here. So from this daily bias, we will go to lower time frame and take only long positions. And if we take short position, we have entries for short position, like we have bearish break of structure, change of character, market structure shift with inversion of 5 minute or 15-minute FVG, and breaker from the order block. It's all bullish. We may enter, but we don't expect a big move. Our TP will be previous week high. And we go on. So we'll take this to the side. So on Monday, Tuesday, Wednesday, Thursday, bullish. And very important thing, we're going to expect Friday, not bullish, but bearish. And this is why. Because since we have, for most of weekly candle, we have weeks, it means the last day of the week were counter trend. So, for example, we take this candle. It was bearish the whole week. The low of the week was Wednesday or Thursday. It went up. This is a bullish daily candle within the weekly candle. This is a push up, which means we expect always a reversal. Not always, most of the time, we expect a reversal on Friday. And if we want to draw, so we print high of the week on Thursday, and we retrace on Friday. So this is previous weekly candle. The weekly candle of this week, the actual weekly candle, it started here. So this was the opening. This was, so it will be a bullish weekly candle. So this is high of the week. And this is low of the actual week. So the daily bias will help us expect to sweep previous week high at Monday, will help us take short on Tuesday, but not extended short, just quick scalp or short moves. Will help us take longs for Wednesday and Thursday and expect continuation and close the trade and expect a reversal on Friday to print the week of the weekly candle. So this is the first part of the daily bias. We saw a bullish scenario and we saw continuation in the weekly candle without any resistance, because sometimes we meet daily FVGs, we meet order blocks, we meet supply and demand zone, strong supply and demand zone, weekly and monthly supply and demand zone, and we have news. So this is the ideal continuation of the weekly candle, and this is how we take the daily bias.